Yeah, good morning, Shristi. See, we look at two to three sectors which look promising. I think one is PSU banking, second is the railway pack, and the third is basically real estate. From the banking pack, we continue to like State Bank of India. We believe that the bank has not delivered as compared to other banks in the same category. Our sense is that over the next say 8 to 12 months, we could see a strong credit growth accompanied by a strong performance by all its subsidiaries. We are looking at a target price of around 750 over the next 12 to 15 months. In the real estate pack, we like Anant. We have been talking about this stock on your channel quite regularly. But looking at the fact that recently the company made a preferential issue at around 275 rupees, and the data center business is all poised to do well over the next 12 to 18 months. We are looking at a target price of around 375. And the last stock is Texmaco Rail, which is into the manufacture of wagons. They have an order book of almost close to 4,000 crores. They did a QIP of almost 750 crores. Our sense is that the next 2 years, the revenue visibility is extremely strong. And I think at these levels, the risk reward appears quite attractive. So we are looking at a target price of 230 here. So these two to three stocks would be really our top bets for 2024. Yeah, I think as far as REC is concerned, I think the stock has performed significantly well. Typically, I think at these levels, if one were to buy, then one needs to take at least a 2 year view into mind because, the risk reward, at least in the near term, seems to have been capped by the stock price. But I think business prospects seem to be quite encouraging, for power distribution companies, power financing companies, as well as for power generating companies. Our belief is the next 2 to 3 years would be extremely strong. So I think if he has a timeline of at least 18 to 24 months, he can definitely buy the stock at the current price. He can even buy on every decline. But I think this should not be a short-term investment. It should be more of a long-term investment. And as far as dividend yields are concerned, I think now the dividend yields would not be that attractive because the stock has almost multiplied 2 to 3 times the on the upside. So clearly, I think for a growth-oriented opportunity, I think one can accumulate this stock, but from a longer-term perspective. No, I think he can hold on to LT Foods. See, LT Foods is a well-known player in the basmati rice market. Largely, this company has a very large domestic market share plus a good export presence in the Middle East countries. And I think basmati prices of late have started moving significantly upwards. So you could expect better numbers for not only FY24 but even FY25. My sense is that if we can hold on for the next 12 to 15 months, another 15-20% upside looks possible. So would suggest him to hold on and obviously wait for the upside to come in over the next 12 to 15 months. He may book part profits if he wants because clearly his profit seems to be quite significant. But yes, the balance quantity should be held on for better upside over the next 12-15 months. Clearly, I think the tower business where Indus Towers operates, this company enjoys a market share of almost 50 to 60%. And I think looking at the fact that 5G rollout is going to happen more aggressively in 2024, my sense is that this can be a good opportunity to hold on. I mean, although the investor has spent 2 years here, I would believe the numbers at least for the first half seem to be quite encouraging. And despite the fact there have been some reports that Vodafone has not paid them their dues, I believe they manage their finances pretty well. So if the investor has a 12 to 15 month horizon, I think he should hold on because the 5G rollout is going to involve a massive distribution exercise and where the transmission telecom towers have to be expanded quite significantly. So I think next 12 to 15 months he could expect a decent risk reward. Our sense is a price target of at least 230, 240 looks possible. So continue to hold on. Tata Coffee and Tata Consumer is now going to become one listed entity. So I think it's better to play, the consolidated entity that is Tata Consumer. My sense is that in the longer term, the synergies for Tata Coffee and Tata Consumer are going to be pretty solid, and you could see the material impact getting reflected in FY25. From an investment standpoint of view, Tata Consumer would be a better way to play the bigger opportunity because obviously, the bigger entity would reflect the numbers on a consolidated level. The merger has now got the approval, and I believe that it's better that one invests in the frontline company rather than Tata Coffee. Of course, growth prospects for Tata Coffee also at the current level appear to be good, but from a risk reward point of view, Tata Consumer could be a better way to play this opportunity. I think since he has already purchased at 84 and the price is 130, I think it makes sense for him to hold on. Any fresh buying, I think, should be decided only when some clarity comes in. If the petrol prices are cut by, what market expects by about 8 to 10 rupees, that would definitely be sentimentally negative for almost all the oil marketing companies, including IOC. Of course, profitability would not be hit that badly because these companies have been making very good gross refining margins. So I think he can hold on the existing quantity. Fresh buying, I think, can be decided little later when clarity on this aspect comes in. SST buying Bajaj Finance at the current level. My sense is that he already holds 100 shares. I would not be surprised that Bajaj Finance would find the going pretty tough and challenging now that new competitors have emerged on the screen. We are more positive on Geo Financial Services. I would believe that if the investor can give in at least 12 to 15 months, Geo Financial looks pretty interesting. I think they've already made a big announcement in the AMC business by tying up with BlackRock. They have already started the consumer finance division. So I think if the investor can hold on for the next 12 to 15 months, I think one could expect a decent upside in a stock like Geo Finance, which is all set to disrupt the financial services space. Bajaj Finance has its merits, but I think considering the base value and the base value of Geo Finance could definitely be accumulated at the current. I think Britannia could be held on to because my sense is that the rural markets have started now looking up again, and I think within the urban markets, Britannia continues to have a dominant market share in the biscuit category. The company's management commentary post the Q2 numbers was also quite encouraging. So we could expect better numbers not only for the second half but a much better year in FY25. Hopefully, once elections are announced, rural markets are definitely going to pick up, and that could obviously expand and benefit a category like biscuits where Britannia is dominant. So continue to hold. Dronacharya Aviation, has been a very good IPO from the SME market, and the company initially started, into drone training, but now they have gradually migrated to manufacturing of drones. In fact, they cater largely to the defense sector, and I think the order book is quite promising. Our sense is that over the next 12 to 18 months, we could expect a lot of good announcements from the company and obviously a better traction in the numbers. So I think he should continue to hold. Our sense is that the drone market is a very big opportunity, and drone approvals don't come easily to companies who operate in this space. So I would believe that over the next 12-15 months, if we can hold on to this stock, he could expect a further risk reward from the current level. So continue to hold. I think IRCTC looks quite promising. I think IRCTC is a platform based company, and I think the kind of run up we have seen in the railway stocks, I think clearly IRCTC had underperformed for a long period, but I think now traction seems to have come off. Our sense is that over the next couple of years, IRCTC would gain significantly because apart from the railways, now they've also decided to look at non-railway customers, which would expand their business pie in the coming years. So I think even at the current odd levels, if one were to buy into IRCTC, one could expect a decent risk reward over the next, say, 12 to 18 months. So definitely a buy on decline. And even at current level, the investor can chip in and buy into this stock as a long-term investment. Yeah, I think looking at the current price, Srishti, this looks pretty attractive. They are into float glass, and they are vendors to almost all the passenger cars and the commercial vehicle players. In fact, glass is a very specialized input, and here the business is pretty sticky. So I would say yes, if he's got a 2 year plus view, he could definitely accumulate at the current level. Grain industries is in a very exclusive product category called calcine petroleum coke. The growth in this market is entirely dependent on how the aluminum market performs. So I think, clearly if the investor has a 12 to 18 month horizon, one could definitely look at, nibbling into the stock at the current level. The company is one of the largest amongst the Asians region and one of the top 7 global players making this product. So I think once aluminum prices start rising and the volumes grow, definitely CPC players like grain industry should benefit. So I think longer term point of view, he can definitely accumulate, but not from the short term view, but from a slightly medium to long term view.